Hello guys, welcome to the channel. Today we're having an educational video. We're back to the basics and we're going to talk about interesting theme like how to build a well-balanced crypto portfolio. So it can be useful for beginners as for experienced crypto enthusiasts and traders, and that's super cool that this video is universal. Before we start, as always, smash like button and subscribe to the channel, and let's get started. Okay, so what is a crypto portfolio basically? A crypto portfolio is a collection of cryptocurrencies owned by an investor or trader. Portfolios typically contain a variety of different assets, including like altcoins, crypto, financial products, and etc. So it's pretty much similar to traditional investment portfolio, except you're sticking to crypto class. You can track your crypto portfolio manually with a spreadsheet, for example, or use specialized tools and software to calculate your holdings and profits. Always a good portfolio tracker can come in handy, remember that. Although these trackers are essential to day traders and other short-term traders, but it's also very efficient for long-term investors and holders. So in short, that's what this video is going to be about, and let's spread that brick by brick and learn each section closely. So the first thing that I want to talk about is to know what is asset allocation and diversification. What is the difference? First, when you create an investing portfolio, you should be familiar with such concepts like asset allocation and diversification. The first one refers to investing in different asset classes like cryptocurrencies, stocks, bonds, precious metals, and etc. Diversification and its part relates to the distribution of your investment funds across different assets or sectors. For example, in cryptocurrency portfolio, you can diversify across different products, coins, and tokens that present different goals, use cases, and you can also allocate your portfolio with, for example, 40% of BTC, 30% of stable coins, 15% NFT, and the other 50% to altcoins. There are commonly two types of portfolios, people say. It's concentrated and diversified. Most people will tell you that your crypto portfolio has to be diversified. While it is a standard for investors, there are pros and cons of this approach, and we're going to explore that right now. As I mentioned already, a diversified portfolio reduces overall risks and volatility. Not every investment will be a winner, of course, so losses can be offset by gains that will keep your position stable. Your portfolio also has more opportunities to make gains with each coin you own, and you're more likely to make profits in the long run, of course. However, the more diversified your portfolio is, the closer it will track the overall market. So a highly diversified portfolio will lead to more average returns than a successful concentrated portfolio. Moreover, worse performing assets can balance out high earners. Managing a diversified portfolio also requires more time and research. So to invest soundly, you should actually understand what you're buying. And with the large portfolio that you're having, it's pretty hard to do. If your portfolio is across different blockchains, you may also need to use multiple wallets, exchanges to go across different assets, different classes of them. So the decision, of course, diversify or not is yours, but some diversification is always recommended. Okay, so next thing, let's see what types of cryptocurrencies we can include in our portfolio. BTC is the most famous cryptocurrency and it is the biggest by the market cap. But a well-balanced portfolio will include a selection of different coins to reduce the overall risk. So let's go through some of them. So the first things that I want to stress, these are payment coins. And actually nowadays it's hard to find new coins that primarily deal in payments. Back in the days, in the beginning of cryptocurrencies, most projects were like systems to transfer value. So BTC, Bitcoin is the most well-known example, but there are others like Ripple, Bitcoin Cash, Litecoin, and even Dogecoin, I believe. These coins are the first generation of cryptocurrencies that existed before Ethereum and the introduction of smart contracts. The second one here are stable coins. A stablecoin attempts to track an underlying asset such as fiat currency or precious metal. BUSD, for example, pegs the US dollar with a 1-to-1 ratio, and while stablecoins don't necessarily provide large returns, they live up to their name and provide, first of all, stability. The cryptocurrency market is volatile, of course, so having something in your portfolio that keeps its value to safeguard your gains is pretty useful. Next thing, the third one, are utility tokens. A utility token acts as the key to a service or a product. So for example, BNB and ETH are also both utility tokens. Among other things, you can use them to pay for transaction fees, for example, when interacting with the apps. And one important thing here is that the token's value should theoretically have a direct link to its utility value. Next thing are governance token, and it's pretty much the same, but by holding a governance token, you can receive voting power on a project or even share of the revenue. You'll most likely find these tokens in decentralized finance platforms like these PancakeSwap, Uniswap, SushiSwap. It's like utility tokens, like the value of a governance token directly relates to the success of the underlying project. And the last thing that I want to talk about are financial crypto products. A portfolio doesn't just have to consist only of holding different coins. Financial crypto products can also help you to diversify your portfolio even more. Think of it a bit like in investing in government bonds, ETFs, or mutual funds rather than just holding shares. There is a massive amount of products you can invest in across different blockchains and dApps, so always remember that. So by knowing all this previous info, we can finally answer the question like how to build a well-balanced crypto portfolio. Of course, each investor or trader will have their own ideas of what makes a well-balanced portfolio great. But there are some general rules worth considering, so we're gonna dive into them. Number one is to split your portfolio between high, medium, and low risks. A portfolio containing a large portion of high-risk investments is definitely not balanced. It might have the chance to provide you bigger gains, of course, but it also may cause you huge losses. So there should be always a mix of them. Number two is consider holding some stable coins to provide some stability to your portfolio, of course. Stablecoins are the key to many DeFi platforms, and they can help you to quickly and easily lock in gains or exit a position. Number three is to rebalance your portfolio once in a while. The crypto market is very volatile, of course, and your decisions should change depending on the current situation, so always remember that. Number four is to allocate new capital strategically to avoid overwhelming any one area of your portfolio. If you have made a big gains recently from one coin, it can be really tempting to pump in more money into that. So don't let your greed interfere and think about where you can better place your money. Number five, and the most crucial, do your own research. You can't really beat this classic piece of advice. You are investing your own money, your own investment, so don't rely solely on the advice of others. And number six, and most people always forgot about them, only invest what you can afford to lose. Your portfolio isn't correctly balanced if you feel stressed out about it. Your positions should not cause you serious consequences or brain damage in case things go terribly wrong. Okay, so finally, let's talk about crypto portfolio trackers. A portfolio tracker is a program or service that allows you to trace the movements of your holdings. You can see how your current allocation stacks up with your long-term goals and track your overall progress. Here are some examples of crypto portfolio trackers that you want to consider. Firstly, of course, it's CoinMarketCap. It is a hugely popular price tracker that's developed its own portfolio feature. The portfolio tracker is available for free on desktop and mobile devices. To use the portfolio tracker, you need also to add in your holdings manually, and as it doesn't connect to your wallet or exchange for obvious reasons. There is also the option to add in the prices that you initially bought the asset so you can track your gains accurately. The second one from popularity is CoinGecko, and is mainly known for its cryptocurrency price tracking, but it has a portfolio option too. It is a free tool as well and is used on browser or mobile devices, of course. If you're already a regular CoinGecko user, the tracker is worth a try too. The third tool that I want to talk about is Blockfolio. If you'd like the option to trade when managing your portfolio, Blockfolio is a good option. The company has been around since 2014 and is well known in crypto space, of course. And the fourth one here is Delta. Delta is a mobile app that allows you to view your crypto portfolio and also traditional investments simultaneously. You can connect with 20 exchanges in a variety of wallets. There is both a free and paid version, of course, but you cannot trade within the app, remember that. So to sum it up, I would frankly say that a lot of the cryptocurrency market is really dependent on the health of Bitcoin. But that's no reason not to balance your portfolio. Varied crypto investments can offset some of the losses that occur when a Bitcoin crash. So it's always worth having some diversification. Remember, there is more to balancing your portfolio than holding multiple coins. A bit of strategy will go a long way in creating a sustainable portfolio for your risk tolerance. So that's it for today. Hope you have enjoyed watching this video and it was useful to you. Don't forget to subscribe to the channel as well as smash likes. So see you next time. Bye bye. Have a great day.